The stock market is currently closed, and the final recorded closing price for NUBURU, trading under the ticker symbol BURUO on the NYSE American, stands at exactly $0.1474 per share as of the market close on June 23, 2026 at 4 p.m. Eastern Time. This final price reflects a notable intraday drop of 6.41% from its previous session, capping off a highly volatile day where the stock opened at $0.1525, climbed to an intraday high of $0.1569, and sank to an intraday low of $0.1461. While a casual glance at this low single-digit penny stock might suggest a dying microcap fading into obscurity, the deeper reality is that a staggering 15.29 million shares changed hands during this single trading session. This massive trading volume indicates an intense tug-of-war happening behind the scenes, far outstripping the typical liquidity you see for companies of this size, and signaling that a massive structural reassessment is underway among a select group of highly active market participants. When individual retail investors log into their retail accounts, the general expectation surrounding microcaps like NUBURU is that they are nothing more than speculative lottery tickets with no real commercial substance. Many people looking for investment help assume that small-scale technology companies are just waiting to get delisted or run out of cash entirely. However, the unexpected reality is that this tiny firm holds an incredibly valuable, highly defensible portfolio of core intellectual property that some of the largest aerospace, automotive, and defense entities are quietly evaluating. While mainstream media attention is constantly sucked up by megacaps like Tesla stock or Apple stock, the underlying mechanics of high-power industrial manufacturing are shifting towards specialized equipment providers. The common ground most casual market watchers share is the belief that safety lies exclusively in large blue-chip tech entities, leading them to overlook specialized industrial companies that form the actual backbone of manufacturing technology. But a contrarian look at the sheer scale of recent volumes suggests that smart operators are using sophisticated tools to accumulate shares at what they perceive to be an absolute cyclical bottom. To properly understand the recent stock movement, we have to look closely at the daily swings and macro pressures that have battered the equity over the past few months. Looking back across the charts, NUBURU has experienced a brutal downward trend, falling from a 52-week high of $4.24 all the way down towards its recent low of $0.1371. This persistent downward pressure has been exacerbated by continuous financing rounds, share dilution, and the broader macroeconomic tightening that has sucked speculative capital out of risk assets. When interest rates remain elevated, the cost of capital for a pre-revenue or low-revenue technology company skyrockets, forcing them to accept dilutive convertible debt or equity lines that put a constant cap on any upward momentum. This structural selling pressure is exactly what we saw playing out in the regular trading sessions, where every minor rally is met with institutional liquidation. Yet the fact that the volume spiked to over 15 million shares on a day with a 6% decline indicates that a major block of shares is being transferred from exhausted retail holders into stronger institutional hands, or that short sellers are aggressively defending their positions near the absolute baseline. For anyone managing an individual brokerage account, navigating this type of price action requires an understanding of microcap liquidity dynamics. When trading on a standard Fidelity trading platform or using the Fidelity mobile app to check up on your holdings, you can see that the bid-ask spreads on microcaps can become incredibly wide during periods of low volume, only to compress rapidly when a surge of interest hits the tape. This is precisely why institutional players do not buy these equities all at once. Instead, they utilize sophisticated algorithms across advanced venues like an interactive brokers platform to accumulate fractions of a percent of the daily volume without sending the stock into a vertical spike. For retail participants who prefer self-investing and rely on online investing sites for their data, seeing a stock drop 6% on massive volume is usually a terrifying signal to cut losses. But experienced operators know that high-volume capitulation days often mark the exhaustion phase of a long-term bear market, where the last remaining weak hands are forced out right before a potential structural reversal. Please take a moment to interact with the community and comment below how many shares of NUBURU you currently hold in your portfolio, or share your thoughts on whether microcap technology firms can survive this harsh capital market environment. If we peel back the market data and look at what the business actually does, the core model becomes much clearer. Founded in 2015 and operating out of Denver, Colorado, NUBURU is a highly specialized developer and manufacturer of industrial high-power, high-brightness blue lasers. In the broader manufacturing landscape, traditional infrared lasers have been the standard for decades, but they suffer from significant physical limitations when it comes to welding highly reflective metals like copper, aluminum, and gold. Because these metals absorb blue light at a rate that is up to 20 times higher than infrared light, the technology allows for faster, defect-free welding and high-speed three-dimensional printing. This capability is absolutely essential for the production of electric vehicle battery packs, consumer electronics, and aerospace components, where even a microscopic weld defect can lead to catastrophic failure. Their business model revolves around selling these specialized laser engines directly to industrial integrators and original equipment manufacturers while attempting to secure long-term recurring revenue through servicing contracts, specialized spare parts, and proprietary optical components. Historically, the transition from laboratory development to full-scale commercial manufacturing is where companies like this face their greatest financial hurdles. Past financial reports show a consistent pattern of high cash burn, driven by intense research and development expenses alongside heavy selling, general, and administrative costs. For example, their recent quarterly report showed revenues hovering around $400,000, while total operating expenses climbed over $8 million, resulting in a significant net operating loss. This massive imbalance between incoming commercial revenue and outgoing operational costs is the primary reason why the equity has been stuck in a multi-year downward spiral, forcing management to continuously seek external funding. Investors utilizing automated advisory systems like Schwab Intelligent Portfolios or a specialized SoFi robo-advisor would typically see the stock flagged as a high-risk asset due to these deeply negative profit margins and the lack of predictable cash flow. When an intelligent portfolio evaluates fundamental metrics, a company with a high debt-to-equity ratio and ongoing net losses is almost always excluded from stable, long-term models, leaving the asset to be traded primarily by active participants on platforms like Robinhood or SoFi Invest. Looking toward the future, the outlook for NUBURU depends entirely on the sharp contrast between market expectations and operational reality. The prevailing market expectation, which is currently baked into the sub-15-cent stock price, is that the firm will ultimately fail to achieve commercial scale and will be forced into bankruptcy or a highly dilutive restructuring. The reality, however, is that several massive catalysts are hovering on the horizon that could completely disrupt this narrative. The company has recently dropped updates regarding a joint venture with Maddox, a revamped proposal to acquire Techne, and a massive Ukraine-focused infrastructure project that management claims could potentially generate up to $140 million in future revenue. If even one of these structural agreements transitions from a letter of intent into hard, recognized cash flow, the revenue profile would change overnight, completely catching the short sellers off guard. For active participants using a SoFi trading platform or interactive broker stock trading tools, the upside optionality in these scenarios is exactly what makes the risk-reward profile intriguing, even if the baseline probability of failure remains structurally high. Of course, the risks here are just as immense as the potential rewards. The primary threat to survival is the ticking clock of cash runway, as the company must secure consistent, non-dilutive financing to keep the lights on while waiting for these massive industrial contracts to materialize. If they are forced to execute another massive reverse stock split or issue more toxic convertible debt, the existing equity holders will continue to see their ownership percentages eroded, regardless of how great the underlying blue laser technology is. Furthermore, larger industrial competitors with massive balance sheets could eventually develop competing blue laser systems, using their established distribution networks to crowd out smaller pioneers. When individual investors perform self-investing through online investing sites, balancing these existential funding risks against the massive technical superiority of the product is the ultimate challenge. It requires looking past the daily noise of retail sentiment on a Robinhood app and analyzing the institutional filings to see if any major backstop investors are stepping in to guarantee the debt. When we look at how individual brokerage choices impact the execution of these trades, the platform matters immensely. Active traders who utilize interactive brokers trading benefit from low interactive brokers fees and deep access to lit and dark liquidity pools, which is vital when trying to enter or exit a highly volatile penny stock without moving the market price against yourself. On the flip side, retail investors using Robinhood stock trading or checking their balances via Robinhood crypto and cash management tools are often subject to different order routing practices, which can affect execution quality in fast-moving microcaps. Whether you choose Fidelity Investments to hold long-term positions through Fidelity Mutual Funds and Fidelity ETFs, or prefer the agile active trading features of SoFi Active Investing, understanding the structural limitations of microcap trading is paramount. These stocks do not trade like a stable allocation in Fidelity IRAs or a diversified basket of Fidelity brokerage assets. They are highly inefficient, headline-driven vehicles, where price action is disconnected from fundamental value for long stretches of time. In conclusion, the story of NUBURU is a classic case study in the tension between negative market sentiment and latent operational value. The broader market expectation has priced this company as if liquidation is an absolute certainty, focusing entirely on the historical cash burn, the falling chart, and the constant threat of share dilution. The underlying reality is that the company possesses an elite, highly validated industrial technology that solves a critical bottleneck in the global electric vehicle and aerospace supply chains, backed by a massive pipeline of potential international contracts. For investors monitoring the market through modern channels, whether that involves checking a Robin on Investments account, managing assets via Fidelity Wealth Management, or scanning ideas on popular investing sites, the central insight is that NUBURU is a high-stakes binary bet. If management fails to secure non-dilutive financing, the stock will likely fulfill the market's worst expectations. But if they land just a fraction of their $100 million project pipeline, the operational reality will completely smash expectations, creating a massive reevaluation that leaves late-coming observers far behind. Disclaimer. This video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any investment decisions. Invest responsibly. Don't forget to like, comment, and share this video to support the channel.